Hello, this is Dr. Bhushan Shandar. Welcome back to the part D of our series Trading the Gaps. Let us see how much higher or lower Nifty tends to go and with what size of gap, bull gap, bear gap. Let us understand that. I've taken three categories on the bullish side and three categories on the bearish side. Okay. Suppose the gap is 0.25% or more up compared to yesterday's close. 0.25% of Nifty level. Okay, which means if Nifty is at say let us say 10,000 for ease of understanding. If Nifty is at 10,000, 1% becomes 100. Quarter percent is 25 points. So if 25 points higher than yesterday's close, that falls under this category. Second category, 0.5% more compared to yesterday's close. Okay, so with Nifty 10,000, this level is 50 points. And 1% more compared to yesterday's close, that is 100 points. Same way on the downside, 0.25% down, which is 25% below the yesterday's close. 0.5% down, which is 50 points below the yesterday's close. And 1%, that is 100 points below yesterday's close. Remember why I have taken these? Because see, some basis we have to take grouping them. The observations are slightly different for each category. So let us understand what happens in case of what sized gap. Okay. Now, of course, this is 10,000 I have taken only for convenience. You have to take current Nifty level and decide the gap size, right? Or in points, how much it is. So let us say yesterday's close is here and today's open is 1% up is here. Naturally, 1% down will be here. This is my 50% up, this is my 50% down. This is my 1/4% up, this is my 1/4% down. So I have different categories. One is more than 1% up. 4% of times Nifty gives this much gap. Only 4% of cases. More than 1% down, it's only 3.4% time this happens. 0.5% up, 13.5%. 0.5% or more down, but not 1%. 6.2% times this happens. Between 1/4% to 0.5% happens 21% times. Between 1/4% to 0.5% down happens 7.8% times. And in between, 43% of times Nifty opens 1/4% down to 1/4% up, but tendency to open up is more in general if you talk. Okay, so if you have a call open, naked call, you're shorted a call. But its strike price is 1% high, then directly at the open reaching there probability is very less. But if you have a naked call open which is say only 0.5% up or less than that, then there is a significant possibility that on the opening only you may be the Nifty may be above your strike price, your sold call. Understood this? Of course, this also shows that only 43% times the gap is plus or minus 25% range. Usually it is more than that. More than say for 56.7% times the gap is more than that. Opening gap, right? Again, it may be a partial gap, it may be a filled gap. Now let us talk of a filling up of a gap. Suppose there is a gap, there is an unfilled gap, there is a full gap. What is the probability it will get filled up? All right, so filling the gap slightly differently it is used than conventionally used. Okay, filling a gap means today's open is above yesterday's close and today's low is below yesterday's close. So it had formed a gap and came down, but close, it has to come below the close, not just below the shadow. Shadows overlapping I have not considered as filling a gap because gap I have measured from closing price. All right. So filling a bear gap means today's open below yesterday's close and today's high above yesterday's close, not yesterday's lowest point. All right, understood the difference? Filling of the bull gap. 66% of bull gaps are filled within the day. That's a huge number. It has formed a bull gap. Suppose you have a close. Tomorrow there is a bull gap and you are in a loss. What should you do? Better you wait, because 66% of times it will come below yesterday's close. Simple. Very less probability will simply run up. 52% of bull gaps bigger than 25%. Instead of total number of gap, if I say gap is more than 0.25%, I'm sorry, they are filled within the day. 40% of the bull gaps bigger than 0.5% are filled within the day. And only 29% of the bull gaps are bigger than 1% are filled within the day. Which means if the bull gap is huge, then probability that it will fill up is only 29%. But if bull gap is not that big, there is a fair chance it will be filled up within the day. All right. Now let us talk of the flip side, the negative side. But let us talk of half filled first before we go on the bearish side. Half filled, 50% filled. Suppose there is a big gap, 1% gap. Will it come to 0.5% level so that your profit, so your loss is reduced? Okay. So this is last 5 years. 59 bull gaps were formed larger than 1%, out of which 37 were more than half filled. But out of these 37, 22 were fully filled. That is 37% of original 59 within the day. Okay. So more than 1/3 possibility in last 5 years that a big or more than 1% bull gap that is going to get filled. So if you have overnight bullish positions and next day market opens with a gap, okay, it's better that you book profit in it because it's more likely to go down. You have got a huge gap up, better book it. Okay, at least partial half, you book at least half the profit. If your overall view is up, fine, no problem. You let it come down, you can again create a long position. But if it's a gap up, book up at least partial profit. Very few times market continues to keep going up significantly after a gap up opening of 1% or more. Understood? Usually this continuation happens when market movement is based on some news, some really huge important news which is not going to get discounted on the first day itself. Usually majority of the news are discounted immediately. But you know, some major news items which are fundamentally changing the structure of the market, they can continue for several days. So if that is not the case, it's better that you book your profit. They are rare, right? Now let us talk of bear gaps. 37% of all the bear gaps are filled within the day. Bullish were filled almost 66%. Bearish barely half of that. Okay. 47% of bear gaps bigger than 0.25% are filled within the day. 34% of bear gaps bigger than 0.5% are filled within the day. Only 1/3. And only 24% of the bear gaps bigger than 1% are filled within the day. Other way around, they are not filled. What about partial filling? Let us see that also here. So if there is a 1% bear gap down, 3.45% times Nifty has opened with -1% or more bearish gap down. But only 54% of these, it filled at least half the gap formed. Half the times it filled half the gap. Roughly 54% is very close to 50%, right? About 46% times Nifty continued to fall to more, and it reached more than 1.5% after that open. So on the downside, the bounces are relatively rare. And entire gap filling was only 29% if the original gap was -1%. 29% of whatever were the down. Okay, 1% gap. So if you have overnight bearish position open and next day market opens with a gap down 1% or more, you take partial book profit, right? Because 54% times it fills at least half the gap. Once it fills that half the gap and again starts falling, you can again increase your short position which you are covered in the morning. So in nearly half the times the market continues to keep going down 46% times. So don't book full profit also. when there is a 1% gap down, because there is half 50% or 46% chance that you will get 0.5% more over there, 0.5% of Nifty. Okay, on the same day. Now, percentage of gaps in the last 6 years, 55% times. In last video, I told you, though overall right from 2011, it's almost 66% times there is a bull gap. But last 5-6 years, since January 17, 55% of times there is a bull gap and 45% times there is a bear gap. All right. So that is the difference in the recent past. But 66% bull gaps were still filled within the day, and 58% of bear gaps were filled within the day. Yeah, this is the recent past, and the last slide which I showed before this, that was from 2011. Okay. If the gap is more than 25%, quarter percent, 0.25%, 52% of the bull gaps were filled up within the day. So half of them. And 42% of bear gaps larger than 0.25 were filled up within the day. When I say larger than 0.25, it also includes larger than 0.5 or larger than 1. Okay. If the gap is more than 0.5%, 38% of bull gaps larger than 0.5 were filled up within the day, and 31% of bear gaps were filled within the day when it was 0.5% gap down. And if the gap is more than plus or minus 1%, again 37% gaps, bull gaps larger than 1% were filled up within the day, and only 18% bear gaps larger than 1% were filled up within the day. Okay, so that is the statistic about the gaps. So if there is a gap up or gap down, and depending on its magnitude, it's better that you book at least partial profit on the gap which is bigger. The bigger the gap, quite significant losses in your profit, or okay, may result. On the other hand, if you are in the loss, if you took a wrong position and market has gone against you, then it's better to be a little more patient, because immediately loss booking may not help you. Market will soon come to give you back your money, the opportunity that you will lose in case you have booked your losses and exited in a hurry.